To today's webinar. We're looking forward to the discussion today. This is part of our Expert Insight series here at A&D Mortgage. Today's webinar is called Working Smarter to Broker More Business. We know that brokers are busy people, and so we want to help you be more efficient. I'll go ahead and introduce our speakers here in just a second. Let's go through kind of a quick agenda. So we've got a couple areas that we're going to cover, particularly how working down the pipeline to find the right solution for your borrowers, how to work on getting fast closings using technology, and then just what are some of the intangible skills that you as brokers can use to help yourselves be better. And then we'll leave it open for Q&A after that. And we ask you guys to use the Q&A function that's on the panel for the guests. And then if you could turn off cell phones so that you've got our full attention, that'd be great. And then I'll answer the first question that I always get, which is are these recorded? And yes, they are. We'll send out the recording within the next 24 hours. So you'll get a copy of the recording and some of the slides that we will be referring to. So quickly introducing our guests, we have Rob Chrisman of the Chrisman blog. He'll be moderating. He's our industry guru, and I'll let the others introduce themselves as we get a little deeper. David Colwell, he is our Executive Vice President of LenderPrice, one of the major pricing engines out there. And then we're joined by two of A&D's top account executives here based on the East Coast, Carla Biancaniello from New York, and Rich Dwyer. I don't remember where you're based right now, Rich. Are you in Florida?
New Jersey.
New Jersey.
Oh, yeah, he's with you. Okay. All right. So with that, let me turn it over to, I'll give the background on the company really quick for those who don't know who we are. So A&D Mortgage is a full service lender. We specialize in non-QM, but we also do government and conventional as well. We were founded about 15, 16 years ago. We work with a base of over 6,000 brokers nationwide. We're backed by a company called Imperial Fund, so that allows us to make our own underwriting decisions, determine our own risk, and develop non-QM solutions as the market dictates. And then we work with the secondary markets. We can skip what makes us different. And then in terms of where we're currently located, we're licensed to do business in 42 states. Most of those licenses are for business purpose loans only. Anything that's in the dark purple are ones where we can do every type of loan. And then we're applying for a few other states. So hopefully within the next 6 months, those light purples will turn to dark purples. And we'll be a little bit further along. And with that, I will turn it over. I'll stop sharing and turn it over to Rob really quick. Rob, go ahead and take it away.
Carl, you can hear me okay?
Yep, I can hear you just fine.
And with that, thank you.
Remove myself from the screen and let you guys have an.
All right, while you're removing yourself, I'm going to ask the panelists to provide a very brief bio. So Carla, why don't you tell us a little bit about yourself, where you are and what you do and how long you've been with AD?
Sure. My name is Carla Biancaniello. I've been in the industry about 30 years. This is only the third company that I've worked for, and I'm here 3 years, and I love it. Wholesale lending is my forte, so non-QM as well as I can do it with my eyes closed. And my client base is all the mortgage brokers. Majority of them are in New York, Long Island, Queens, and so on, but here at AD, we are able to have companies in other states as well that we would handle over the phone to manage also.
All right. And Rich, how about you? Rich, can you hear me? Maybe not. David, tell us about LenderPrice.
Yeah, so David Colwell, Executive Vice President here at LenderPrice. LenderPrice is a product and pricing engine platform technology company with several different product offerings. Obviously, primary platform, our flagship platform, is our pricing engine that's sold to lenders, but we also have a marketplace platform of which A&D is a partner. And on that platform, we have approximately 16,000 brokers that use our platform to either find additional lenders or products to widen their product array, or they're approved with those lenders, and so they like to compare their approved pricing with the other lenders that they are looking at. One item of note for all you brokers out there: our platform is free to brokers.
And free is a good price. I think we have Rich. Rich, are you back with us?
Yeah, I'm here.
Oh, okay.
The
Sorry.
connection is a little weak, so I don't know if you were talking to me before and I couldn't hear you, or
I was. I gave you the winning number for tomorrow's Powerball.
I got it though.
already got him.
Anyway, Rich, why don't you tell listeners and viewers a little bit about yourself?
I'm a wholesale account executive with the company. I've been here for going on about 4 years now. Started in the industry in 2004. I've been a loan officer, a sales manager, and wholesale account executive, which is, what I'm doing now and, where I like to be. So, it's been a great experience with the company. So I'm really, very happy, liking it here. That's
good. Glad to hear. So I'm going to stick with you, Rich. Obviously, we have a lot of brokers on the call here, and brokers get a lot of information thrown their way, ranging in terms of price and product and services and so forth. But from the wholesaler's angle of things, when you are looking at a new broker, if you were to give a little bit of advice to a new broker that's coming on board with AD, what would you tell them in terms of loan files, file flow, that kind of thing, to ensure a smooth application and loan process?
I'd say stick with the basics, start from the beginning. The very beginning of, getting a loan submitted, prepping it and getting it ready. Like we have our submission checklist, things like that, based on the different doc type, and, steps for submitting a file. And, they have their account executive, which is what we're here for, to, walk them through it along the way. Broker support we have as well, which is a great backup. But I'd say pretty much stick with the basics, starting from the beginning and, going with, the checklist and walking through it step by step, at least in the very beginning with your account executive, till you get comfortable with the process and how to get things going as far as like loan submissions and, their overall process.
Good. So, Carla, when you are talking to a broker about the financial needs, their goals, and so forth, what are the typical subjects involved in that discussion, and how do you coach brokers in terms of doing business with you?
Well, it depends what their customer is qualifying for or not qualifying for. Generally, with the non-QM, it's self-employed borrowers, so they might be having some issues with them reporting their full income on their tax returns, as most self-employed customers do not do. So we have the alternative documentation products, and I will go over and explain with them on how we can help that customer so they're not tossing a deal away because they don't fit into the conventional, normal, typical program where they have to provide all their financials showing full amounts of income. We use alternate docs that may show all that income but is not reported on tax returns. Example, bank statements from their business showing the business receivables. We take the deposits and we can use that to qualify the borrower. Also, another product is a P&L program, where if they can get just a P&L simply from their accountant, we'll accept that number on the bottom line number on that P&L from the CPA stating their income, and we would use that to qualify. Those minimal documents would not alone be allowed in any traditional conventional mortgage. So,
right. Good. So David, I hear all about technology, and obviously we've already talked about technology on the call in terms of brokers being able to use that. What is, I asked Carla kind of what is the typical conversation you might have? What is the typical conversation that Lender Price might have with a borrower in terms of leveraging the technology that's available for that broker to use? What kind of conversations do you have with brokers regarding that?
That's a good question, Rob. So traditionally, if putting ourselves in a broker's shoes, the first thing we need to find out is overall, their goal is forget technology. Their goal is to be able to expand their reach from both a product perspective, to work with their borrowers to get them in houses, or to work with their borrowers to find or to rent, to purchase investment properties, etc. And so what you want to try to find out is, what are the technologies that I need to put together that will shorten the closing cycle time, provide certainty that the loan is going to close, provide me with the widest product array that I could focus on so that I could service more borrowers, such as utilizing the folks at A&D Mortgage. And then obviously, two key things: the cost. Cost is king right now. So the cost of the technologies they use, and the integratability of those technologies so they can all play together. So we usually ask a broker when they're looking at, specifically for us, pricing technology, well, what LOS are you using? Because that will also predicate the workflow, and we will provide comments on which broker technology platforms we think make the most effective, streamlined closing process and processing of loan processes. So, for example, we integrate with a lot of them. Flowify, Simplify, Flowify, Pre-app 1003, Lending Pad, et cetera. And so based on what technology the broker tells us they're using, we may give him some ideas of how to utilize that technology more effectively in conjunction with our pricing engine, which for most brokers is free to the broker. So we have to make sure that we can provide the integratability of our pricing engine with whichever LOS they decide to utilize, so that they can have a seamless technology platform to close loans faster and to offer a wider product array to their consumers.
Got it. So given that, I'm going to turn this back to Carla. Carla, in terms of when you are dealing with a particular broker who has a client with certain needs and so forth, what strategies or tools do you use to match the broker's clients with the most appropriate loan products that are being offered?
Again, it depends always on the customer's situation. So number one, everybody would say price, but in a market where it's not the cookie cutter borrower, it might not be just the price. So it depends on each individual customer's situation. Goes number one from their credit score, obviously their income situation, what they're able to provide, and the equity, what they're looking to do, if it's a refinance, cash out, or if it's a purchase. So we have those discussions. I'm known as as the front lines, what Rich will say too, is the account executive. The brokers are calling to us first to go over these scenarios to make sure the customer they have fit in one of our programs, so they get submitted properly and not just thrown against the wall. So again, I would say the price is last, because many times we could do a deal where we can help structure a file that nobody else can. And it gives them the idea, and it gives us the competitive advantage with our knowledge and experience to help get them into the right program. And we have a slew of those.
So when you mentioned earlier that wholesale is your forte, and I don't even know how to spell forte. But
well, I've been in many positions through the years as well, and right here is where I started per se, and I'm back in my shoes back to my roots, and I love it.
Right. So how do you use, I'm going to stick with you for a minute.
Sure.
In terms of communication, obviously some brokers probably like a lot of communication. Some brokers probably, hardly like any. Different brokers like communicating different ways. How do you find the best for you?
Yep.
Not everybody else, for you.
Gotcha.
What is your best? What do you tell people about how you like to communicate with brokers? How often? How does that interaction work?
I'm a road warrior, so you strapped me here today to the Zoom call, but I go out on the road and I visit my brokers weekly, daily. So I have maybe 30, 40 accounts, and they're all on rotation. And I go in their office and spend time with them and go through files and go through deals and get them to submit. I'm hitting the road, pushing for business that way. And then all the texts and the phone calls start when I'm not there. And of course, then when I'm in someone's office, somebody else is calling. But my best form of communication is being face-to-face. I'm a hands-on, old school type salesperson. And then, of course, they're all the normal today: texting, emails, all the tools that AD offers. We have a quick pricer online. But again, it depends also on the size of the office. I have some offices that have 50 loan officers, and then I have some offices that have 4 loan officers. So the 50 person might get more visits or a whole day of a visit. And the 3 or 4 person office, I might see twice or a week because I'm visiting other offices during that same day. But the larger accounts, I spend pretty much a full day in there usually.
So Rich, I'm gonna throw that question your way as well, because you mentioned you've been in the business for about 19 years now, and with AD for 4 or 5 years. What have you found to be the best way that you like communicating with brokers and that they like as well?
I lost you. I heard you say my name, but I lost you there. It cut out. I'm sorry, I couldn't hear what you said.
No, I'm going to turn this to you as well. I'm going to ask that of you in terms of communication. You've been in the business for many years as well, but what tips do you give? Like if I was a new account executive, what would you tell me about ways that you best communicate with brokers? Well, that's not good. David and Carla, can you guys hear me okay?
Yes, perfectly.
Okay.
I'm clear. I'm good.
All right. Well, David, I'm going to turn this back to you then in terms of leveraging information and so forth. Not so much the communication side of things, but obviously brokers have a number of tools at their disposal. Tell us a little bit more about lender price in terms of the actual price that's supplied to brokers and how that has evolved with lender price over time.
Yeah, so and let's talk specifically about brokers. We actually have certain brokers that are hybrids, such as NDCs, that they want to provide. So our pricing tool in general, our marketplace tool in general, as I mentioned, is free to brokers. And the way that it's evolved is that we've made it in the beginning, it was not completely self-service. Okay. We have done a ton of development in the back end of our system using algorithms, machine learning, et cetera, so that the broker, they can upload their rate sheet. It may not be, a lot of non-QM lenders only have one, but we have remembered that we do supply the broker with our marketplace platform that does an excellent job at non-QM. It's kind of what we're known for, but we also support all the other marketplace lenders, wholesale lenders that are your traditional bread and butter, such as PennyMac, PRMG, Plaza, etc. And many of those lenders have 40 or 50 different broker rate sheets because they're still focused on price. To Carla's point, the agency guys are still competing a lot on price. Okay.
Agency, yes.
Yeah. And so they have 40 or 50 different rate sheets. So we had to develop our platform in a way that the broker, all he has to do is upload a rate sheet if he's got one, and we will go into the back end of our system and match that tier, specifically that broker's pricing, to one of the many rate sheets that we house on behalf of that customer. The other way that our platform, so we made it 100% self-service. They can put in their comp plans, and that's how we're able to offer it for free. If the broker doesn't have a rate sheet, he just clicks another link, and an email goes to both our support team and to the lender saying, here's the broker's info. They say that they're approved with you, but they don't have a rate sheet. And then the wholesale lender could go in and just click a link that we send them, and it'll pull up all their rate sheets, and they can sign the appropriate tier. For non-QM specifically, which is really one of our strengths, what makes us the broker likes our platform is because for non-QM we are able to manage very granular and custom. For example, let me give you an example. A&D Mortgage may have a DSCR ratio T for DSCR loans that is different than Deep Haven or Angel Oak or whoever the case may be. In most systems that can't accommodate the level of granularity we can, they don't do a really good job of accurately pricing and accurately performing eligibility checks on the programs, because they just don't have the fields necessary to do that. Whereas in our system, I think even though non-QM is, it's growing exponentially, we're almost 45% maybe of all scenarios run are non-QM. So we're a heavy non-QM platform, but we also have all of the other wholesale lenders and programs. So it's truly a one-stop shop for brokers. And so when they run eligibility, let's say, for example, and I'll end with this, that they don't qualify for traditional income, right? And they, have either a requirement, they want to see a drop down, which we have in our system that'll say P&L, banks, 12-month bank statement, 2-month bank statement. Somebody has a 6-month bank statement program, and the broker's able to get to that level of granularity so that he knows from the jump that particular lender is going to be able to do his loan if he so decides to move forward with him.
So I'm not quite done with you yet either. I want to ask you, we talk about the pricing and the programs and so forth, but there's something intangible out there, and that's brand. How do you advise brokers to leverage technology to further their brand and name awareness in their community?
That's a very good question. So I mean, from our standpoint, there's a couple of add-ons from a pricing technology standpoint that we offer that helps the broker strengthen their brand. One is we obviously offer a broker can have their own custom website pricer, so that borrowers as a consumer, just like you do with Quicken, can go in online and they can input some information, or they can fill out an application and they could get pricing. So they need to offer that direct consumer, just like the big boys do, like Cricket or everybody else. That will help strengthen their brand, having a website pricer. The second thing that I think really helps strengthen their brand is to be out there promoting your pricing and programs. So we have another platform, or it's a piece of functionality included in our technology called Rate Alerts, where the broker can utilize our pricing engine to either do recurring rate alerts, like just sending a generic e-blast to all of his borrowers on a weekly or daily basis, however, that says, hey, here's the rates that, for these different type of programs. Or he can do what's called a triggered rate alert. And a triggered rate alert is where the broker enters a scenario, all his closing costs, and picks a price that he wants to be able to hit with the wholesale lender. The borrower doesn't see any of that. But when that interest rate and or price hits that level, then it will automatically send an email to that borrower saying, hey, we're in the money, we hit your price. Those things that's leveraging pricing technology to raise brand awareness. The other thing that I always tell people is that I'm telling you, if you're going to use any form of social media, words mean nothing. Pictures and videos are what catch eyeballs. And so there's a ton of tools out there that the brokers could utilize to promote themselves via social media, and then they can have a call to action inside the LinkedIn post to help promote. So there's a couple of ways. I'm no marketing guru, but those are a couple of things that we recommend that we see a lot from our better brokers.
Very good. Rich, are you back with us?
I'm here.
Good.
Finally.
I never took sign language in college, so
It would have been helpful right now. Yeah.
I'm glad you're back. So you have in working with brokers, and brokers realize that they're one piece of the pie, as it were, in terms of they're bringing in prices, they're bringing in programs, they're bringing in different companies looking at different things, but they're also dealing with appraisers, underwriters, and so forth, title companies, other third-party providers. What advice how do you advise brokers to effectively communicate with those other parties? And if you could give a couple examples, that would be great.
Well, I don't really have a whole lot of that type of interaction. I'd say like when it comes to like an appraiser, maybe, like we have our appraisal center. So it's one of our, great pieces of technology is our appraisal center, where everything is located, all the AMCs that the brokers can select from, right in one place, right in the portal. And they can communicate directly right through with the AMC right through the portal. I'd say that's one good piece of example of where they can communicate directly and get what they need across to the AMC to get to the appraiser. Any messages, any kind of communication or anything like that done directly through the appraisal center.
And then for a while there, back in 2020, 2021, for example, the appraisal situation was, depending on what part of the nation you were in and what kind of loan you were looking at getting, getting an appraiser to go out to some of these remote areas. Appraisals were taking a long time. The price went up and so forth. And so brokers were having to deal with not only the wholesaler, but also the borrower themselves in terms of delays and so forth. Did you ever get involved in advising, or are you involved at all in advising brokers in terms of strategies in managing borrower expectations and setting realistic timelines for loan closing?
For a loan closing? I usually work with our turn times. Our turn times are very quick. We're at about 24 hours across the board with most departments, whether it's underwriting, disclosures, so we work pretty quickly. And, then there's all the, they have to work with the third parties, so there's other factors that come into play that, we can't really control sometimes, but a lot of it's the motivation of everyone involved, getting documentation in. So, our turn times are very quick, and we can get from, I don't give like a specific, time frame for closing, just because it's different for every file, and you never know what could come up. But, I start with our turn times, because our turn times are, very, very quick. So that's pretty much where I'd start with that.
Good. Carla,
Yeah.
you ready? You ready for a curveball here?
All right. Got my glove on.
The last loan or a recent loan that closed from one of your brokers, give us an example of something that came up, or speaking of curveball, some curveball or some nuance or something that you stepped in and said, okay, here's the problem and here's how we can fix it, and the loan ended up closing.
I feel like sometimes I'm pulled into files with
no social security numbers or full names, please.
Yeah. Again, I was going to say sometimes I'm pulled into files for just, minute underwriting issues, or the I had one the other day where we were doing a P&L loan, and all of a sudden on the approval, the underwriter has pay stubs, W-2s. And also the broker called and I'm like, no, that's some, this is simple, but this got to be some kind of error. So when I spoke to the underwriter, he said that was a computer snafu. So of course it put everybody in alarm, and it really wasn't that we needed all that documentation. Another one was, if you're doing bank statements and they're calculating the deposits, once it got to the underwriter, the debt ratio was blown out of proportion. But the reason being is the broker did not calculate those bank statements properly when they submitted them. So the debt ratio was slightly high. Let's say it was 54, 56, and we max at 50. So something that we do is our caveat is that we allow the broker to go back to the borrower, to go to their accountant, prove what they do for a living and prove what their expense factor is. So our typical guidelines for business bank statements is that we use 50% of those deposits to just submit the deals to start without any additional documentation needed. This scenario, once that calculation was done, it kicked the DTI over. So we will allow for the borrower, again, to go back to their CPA, give us an expense factor, which in this case he did. And the CPA came back and said, John Joe Smith's shoe repair, whatever it was, runs on an expense factor of 25%. So that allowed us to now increase the amount of deposits that we used up to 75%. And that saved the deal.
Oh,
so
that's actually a good example.
Yeah, it could go, as high as 90% or 95%. For an example, when we had a customer that was a realtor. So as we know, realtors work out of their home. She did have business bank statements. All her income was deposited through there, but she has no overhead. She doesn't have any employees. Her biggest overhead is the advertisement she does on the property she sells or the borrowers she solicits. So that expense ratio letter went up to a 5% expense ratio, and we were able to use 95% of that borrower's deposits.
Rob, can I interject? And I want to dovetail, even though this isn't my area, on what Carla was saying and pointing out. What we hear a lot, because this whole webinar is supposed to be about helping brokers drive more business or get more business. And I will say this: what I've noticed is that, especially in the non-QM world, leverage your AE, and if they're not doing their job, you find another AE or another company to work with. So to Carla's point, when she said, I still am old school, meet face to face, hand-holding for non-QM loans is absolutely, if the AE isn't pushing both the broker and the internal back office operations team, those deals aren't going to get done. And it is, so I would say the importance of a good account executive to help the brokers in this webinar drive more business is way more critical for non-QM business than it is for your vanilla agency business.
100%
is mission critical.
David, and I'll just say to you, for example, a conventional loan, we're bound and stuck to that conventional guideline the way it is. Your pay stub, 9 to 5 borrower, that's it. There's no flexibility. We don't write those guidelines. We are driven by those guidelines. On the non-QM world, where we have the flexibility and write our own guidelines, we can tweak and we can get exceptions if needed. I could give you an example. Sometimes, I bang my head against the wall because I'm stuck in the office doing all that all day long instead of going out and getting more business. But you have to find the, vicious balance of that, because if I'm sitting here and everything's running smooth, you can be sure I'm gone because I don't want to be behind the computer. But there is an amount that you have to be behind the computer, and you have to be managing the pipeline. And, I'm out there selling the brokers they're dealing with A&D because of me or Rich. And if I'm not there for them, then I'm selling.
You're not going to get the business.
Yeah. Instead of making a pipeline. But it's very, very important. And I'm hands-on on the inside too, which I get my support staff to get used to me too, because the second I leave the office, I'm in the car and then the problem arises and I'm either turning around or I have to get to my support staff. But every program I can give you a scenario where I had to interject to save, and not that the support staff does not know what to do or how, but sometimes just they're driven differently. They're the underwriter. They're
behavior.
They're not on commission. They're not
exactly. There you go.
So they're looking at the box, and then they go, "Oh, I didn't even think to do that," or they'll say it's not their job to give that other option or how to counter it to save the deal. That's our job as the AE. But we try to also get it submitted properly from the beginning, which is important. But again, back to if you have an office that you've got up and running with 50 LOs, they can't run every single scenario by you every second, but they should be up to a good habit.
Right. Rich, now that you're back, I'm going to ask you a question that we'd asked Carla earlier in the session. We learned that Carla's, out on the road, 5 days a week, calling on brokers every day, every other day, at least once a week and so forth. What have you found to be your most effective way to communicate with brokers, and how do you teach brokers or show brokers new product information?
I'd say it's a good mix across the board. I mean, I'll be out on the road, not quite as often. One thing that my brokers know about me, for is my reliability and the fact that they can get in touch with me, or if they can't reach me for whatever reason, I'm calling them back. They don't even have to leave me a voicemail. It's like they know that. So I'm a reliable AE. And as far as like the new products, that's also various ways as well. I'll do like I'll call on my preferred brokers, brokers that I'm trying to get to send in more business, brokers who are showing interest, and just go over a lot of it, and going over new products can also bring in the opportunity to bring in old products, something a pointer that they may not have known, like which happened the other day. A longtime broker that I've been working with, and I was talking to him about a scenario, and I just happened to cover one of our niches, the DSCR program, and mentioning that we have a no ratio requirement where we can go down to we have the 0.75 and below, 0.75 to 0.99 and above 1, and they didn't know that we could go below 0.75, so opened up a whole new conversation, and so it's important, I think, to really touch on all those the old products as well. But I mean, I like to get in front of them whenever I can, but I'm also big on email, phone calls and email. Not a big texter, but phone calls and email mostly. And the phone, look at my call history. It shows I'm on the phone all day. So
right,
that's a good sign.
Good. So along those lines, David, I'm going to ask you. I'll give you an example. How many people out there read the user manual for their car or their phone? Well, and you talk about the amount of the capabilities of a modern smartphone, for example, and how much of that people actually use, or how well do people understand their car, what their car can do in terms of some of the computer program that can be done. You can get people to a certain point, but getting them past a certain point is oftentimes work. And I want to ask you, David, in terms of your clients, you can't be everywhere at once. So how do you advise brokers on staying up on the latest technology trends? And how do you ensure that brokers are utilizing technology smartly to generate more business?
Yeah, well, let's just start with our platform. I mean, first and foremost, like anything, I coined a term once called, the word is adoptimization, meaning if you want to optimize how you do things from a technology, or, if you want to optimize a process, you have to maximize the adoption of the technology that you're using. And let's face it, I could give you a Ferrari, but you could probably drive one, but let's say I could give you, we could have a rocket ship. We could have the best technology known to mankind. But if we as a technology partner and a broker partner don't take the time to not just train you once, but to constantly, like, we have weekly webinars for training brokers. We have tips and tricks that we train brokers. We have a support desk where we have a chat room where the broker gets stuck on how to price. Oh, how do I price out home equity? That's or how do I price out a DSCR loan? What boxes do I check? I mean, you have got to constantly reinforce how to utilize your platform, both, with regularly scheduled webinars, with instant chat, with technology, or those 16,000 brokers aren't going to use our platform. And then guess what happens? The wholesale lenders aren't going to want to partner with us, right? So I think in general, that's specific to lender price. In general, we also send out, I personally feel some of the best tools for brokers to stay up on broker related technology is really the broker associations, either NAM or AIM. They're constantly putting, having webinars such as these, right? I personally, I know brokers want to spend 100% of their time trying to find borrowers and close loans. But at the same time, being aware of, constantly being cognizant of wanting to innovate and improve your ability to get more borrowers and close loans should always be a sliver of your focus on a weekly basis. And so I really recommend to most brokers, if you want to look at technology trends, specifically as they could impact you, leverage the webinars that are being put out by NAM, leverage the wealth of information that AIM and NAM provide, and also participate, like I said, in these types of webinars that are talking about, in general, technology or how to improve your business. Because even if 59 minutes of this webinar is, you're like, yeah, blah, 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 there may be one golden nugget that if you don't listen the whole time, you're not going to get that golden nugget, that one thing that you needed to hear. They're like, I never thought of that. Yeah, I could use that platform, or I should be able to, shoot, you know what? That whole DSCR ratio below 0.75, which by the way is awesome. You hear these things, and you're not going to hear them if you don't take the time to find arenas to listen.
Can I add to the fact that too, it's important that where is updated and changing with the times and the industry and the market. And now the rates are up and they were down last year. And just having sometimes conversations with people keep you fresh and keep you thinking differently, and hearing somebody else's thoughts or opinions. Or, you go into an office, they might be slow that day. And I'll go in there, rile everybody up and say, what do you got on your desk? Oh, the phone's slow. Okay, well, let's talk about this. When was the last time you did an asset utilization loan, or you did a DSCR or a bank statement? And they're like, oh, I have this one borrower. If I didn't walk in that day, they may have tossed that deal out. So it's very much, important to be out and about. I feel like sometimes, or even, I'll send emails out on a Saturday, a mass email, just to liven people up and say, hey, what do you got? You always got to think outside the box and do something different than everybody else and keep people fresh.
Yeah. Broker forums. That's a great way for brokers to gain information, like who's doing what kind of loans. You got Brokers Are Better. There's a ton of broker forums out there. Some of the podcasts are really good, like Fraser's and a couple of others. Rob, some of the stuff you do. So, I would stay connected to your group however you can, because you're going to hear some things that you didn't think about before.
And they can't do the same thing they did last year today and go after the same leads last year that they are today. Same like me. Sometimes I'm getting business from brokers now that weren't doing non-QM last year, but they are now. So it's always, just keep rotating that and keep it fresh.
I want to ask Rich, we're talking about programs and keeping information fresh and in front of brokers and reminding them of things. Obviously, there's older programs that exist that brokers need to be reminded of, and new programs that AD, for example, comes out with, or new underwriting criteria that is new and fresh. Rich, within the last month or two, what new program have you found, or what program have you found that brokers say, wow, you know what, I can use that, or I didn't know that, thanks for telling me about it?
I guess it really comes down to the broker and how new it is to them, and because as far as like new programs, like we'll have little guideline changes, things like that here and there, but sometimes similar to what I mentioned about the DSCR before, and going down below 0.75. That's fairly new to us. I mean, not the below 0.75, but the scale, the 0.75 and then 0.75 to 0.99 and above 1, like that breakdown is fairly newer. But like, for example, like the P&L, where we don't require bank statements to support the income. Same thing with our WVOE program. The WVOE program for people who are, wage earners, salaried. We don't require the bank statements to support the income on that. So things like that, where those maybe programs that are out there, they're not all done the same. And, so that's, new to some of the brokers, where they may be familiar with the P&L program, and they may, have, know exactly how a P&L letter is supposed to get written, how the P&L is supposed to look, how the CPA letter is supposed to be written. I mean, but certain guidelines like that, like not requiring the bank statements is not, the norm. So, things like that would be things that I'd say would, come across as new to some brokers.
Yeah. Carla, do you ever run across brokers who, let's say you're calling on somebody new, and they tell, I'm not going to sit here and role play with you, although
That's
we
okay.
probably could.
I love it.
If you come across a broker and the broker says, non-QM, I'm not interested. We're all we do is Fannie, Freddie, FHA, VA, and we're good with that. Where do you take the conversation at that point?
What are you doing with all the customers that don't qualify for that? And especially in today's market, there's more of those customers that don't fit into those programs and qualify. Just stops there. You can't survive today on just a conventional type brokerage shop. They have to think outside the box, and they have to retrain. So I always say, if you can't do it, because sometimes I go in and I'll speak depending on the owner of the company first. I usually ask for that, or the sales manager, or get to a loan officer and then go backwards. But the only reason they're not teaching their company that is because they don't know it. So I will take on that role and say, listen, tell me when your next sales meeting is. Let me stand in front of everybody, tell you our niche products and programs, and you're going to see how much more business you're going to be able to do. I love building their companies as much as I'm building my pipeline and my team in AD, but my focus and goal is building their company and changing their way of thinking. So that's an office I'm going to go into twice a week, or until I get the first deal out of them that they thought they couldn't do, and hold their hand right through it. And I've done that through the years with many, many companies. I love that challenge. So, sometimes one of my traditional brokers or regular brokers will say, you haven't been in, and I'm like, you guys all know what to do now. I need to go get some new fresh meat and find some new accounts. But it's fresh meat. It's turning them around in that way of thinking. And then that's where, they see the first deal happen, and they see it get done, and they see the ease of it as well. Because in the reality of it, non-QM is much easier than the Fannie Freddie type of loan. Of course, the rates are higher, but you're not that borrower. So you don't deserve the rate that borrower does, whether it's your credit score or your income situation or your credit history, or the amount of money coming between down payment and closing costs and gifts. There's so many things that go into play. And it's just a point of relieving them of the anxiety or stress that they can't do it. They don't know how to do it. They don't want to make a mistake. They don't want to sometimes I can't speak how I do it. It just I sit there and I'm not leaving that office until I know I'm going to turn them around. So,
right. So, we're talking about how to work smarter if you're a broker, and every deal, every borrower, potential borrower, is precious. It isn't as if we go back to 2020 and 2021 where loans were falling out of the sky of all shapes and sizes, and you just had to get them in the door somehow, and the big problem was processing them. Now It's how do brokers work smarter in terms of the deals that are out there. And I oftentimes use the example of, baby carrots. Well, what did we have before we ate baby carrots in the hors d'oeuvre tray? Baby carrots, that's kind of working smarter. Like the carrot industry
Right.
came up with baby carrots. Bottled water, go back 20 or 30 years. No one's, you told somebody that people would be paying $2 or $3 or $4 for a bottle of water, they would have laughed at you. Right. So suddenly the bottled water industry says, oh, let's start, let's import this water from Fiji or wherever, and we'll charge a lot of money for it. And all of a sudden you're able to take something that existed for, since day one, water, bottle it and make money on it. The same thing can happen with a potential borrower, and borrowers have to take that borrower and that situation. And sure, a good broker will be able to slot that toward Fannie Mae or Freddie Mac or FHA or VA. But to your point, when you read off some of the attributes of non-QM borrowers, you don't want to lose that borrower because the borrower is self-employed or because the DTI is too high or whatever it might be. And so it's inherent to the broker to be able to say, okay, we can take this deal, we can take this carrot and repackage it. We can take this borrower and repackage this and figure out how to make it work through the price and programs that are being offered out there.
I want to also interject too that it's not, non-QM isn't only for a self-employed borrower. And to just spin off of what you're saying with the conventional loan, I always say, even to that shop, okay, so you do just conventional. So all the loans that the AUS or the LP does not pass, what do you do with it? And do you understand? You can give me a customer that's pay stub W-2 as well, but they might have a recent credit event on their credit report where FHA or conventional require 4 or 7 years. In non-QM lending, we only require 2 years. So we would get that borrower and they'll say, oh, but the rate's going to be higher now because they don't fit the traditional guideline. But get that customer in the door and then know you're going to refinance them once they fix their problem right now and fix their situation back into the conventional world. So the non-QM could be a temporary fix for them now for whatever, even if it's a purchase, not just a refinance, of even more so if it's a purchase, because they can get into their home right now and then refinance down the line once things are settled or improved, fixing their problem.
Right.
So I think conventional comes our way as well, not just the self-employed borrower, for various reasons also.
Yeah. I was going to say, I think that good brokers, it's amazing the amount of collective intelligence that brokers have in terms of not only the product and programs, but in terms of working smartly with different kinds of borrowers and the psychology of working with those borrowers. Something I could never do, for example. But I wanted to ask David one last question in terms of lender price. What any interesting developments that you have on the horizon that brokers can look forward to in the next 6 months or so?
Oh yeah, absolutely. So we're doing a couple of things. First of all, we have we're constantly taking broker feedback and redoing the broker user interface to make it as intuitive and as intuitive as possible for the broker, in addition to all the webinars and everything. And they're going to see some things that are really sexy around the way that they can quickly, like now, click a loan type and our entire screen dynamically changes to only include those parameters that they need if they don't want to do a generic search. So just making it easier to price. But the thing I'm really excited about, one of the things, is that we're in discussions with some of the larger LOS players out there that have a number of wholesale lenders that utilize a TPO portal, obviously. So that's where the broker traditionally goes to submit the loan. And what we're doing now is connecting the two so that the broker can stay in our free marketplace and be able to actually submit the loan via our integrations to the LOS's TPO platform, so that the broker doesn't have to basically reprice the loan twice. He can price it in our platform, click lock with whoever the wholesale lender is he chooses, and then that wholesale lender will get that information populated in to their LOS. So that's really going to connect, instead of like right now, most brokers utilize, whether it's us or competitor like Loan Sifter or somebody, they'll go in and price a loan, right? And they'll find out who they kind of want to take it to.
Yeah.
And then they'll go to the portal and then they'll upload their documents, or they'll go in and reprice the loan to confirm that the pricing is right. And we're trying to that to us is a wasted step. And we're trying to streamline the broker's origination and pricing process. And this is one way that we at Lender Price can do that for them.
Very good. Very good. I think we are in the waning minutes of our session. I wanted to ask Carl if there were any questions that came up in the chat room, or Carl, can you think of anything else that you'd like to address while we're here?
Yeah, I'll cover a few things, but let me check the screen. Sorry, I lost internet for a few minutes. So it looks like there were a couple of questions. I'm not sure if you guys have answered them. There's a question about whether FHA will do 2 years after Chapter 7. That came in about 3 minutes ago. I think Carl and Rich.
Carl. Oh, here they are.
We'll do 2 years after Chapter 7.
Yeah, we got it.
I lost you again.
Will FHA work with someone if they had a Chapter 7 that's 2 years old?
No.
Okay.
FHA will not. FHA, you need to be 6 or 4 years out. I haven't done an FHA in a while, but not 2 years out. Non-QM can, yes.
Yeah, non-QM you can do even 1 year.
Yeah,
Yep.
yeah. And then written VOE for wage earners seems like it's one step removed from a stated W-2.
The VOE wage earner, yes. It's a borrower that may work for a mom and pop organization, or somebody that might be cash, which I hate to say, but for full point, yes, because they have to be at the same company for 2 years, and the VOE needs to be completed with income on it, and it will be verified. So they don't have to provide pay stubs and W-2s to back up the VOE. It's a VOE alone. And that number on the VOE is what we will use to qualify.
Okay. Any plans to bring back the no ratio? But if I remember, we do no ratios on DSCR, correct?
Correct. Any plans for what? No ratio?
No ratio, true no ratio.
No, only the DSCR right now. But that's somebody I would say, call me, tell me what the borrower does, and let me see if there's a program that we can fit them into that they may not be thinking.
Yeah. And I don't see any questions on the other panel, so we'll give people a few minutes, but I'll just do a quick wrap up from the slides. So for you folks, if you're not already following us on our social media pages, you can scan this QR code. It'll take you to a landing page where you can sign up for all the platforms that we're on: TikTok, Instagram, Facebook,
Snapface.
Yeah. I think the only thing we're not on still is Napster, Friendster, and
InstaChat.
MySpace.
MySpace. Is that around?
Yeah, well, that's my point. And then just a quick reminder, if you aren't working with us, that these webinars are a part of our overall strategy to be your partner for growth. And we do that really through what we call the 4 pillars, which is our streamline loan process, the can-do attitude and expertise of our account teams, loan solutions that grow. So that, again, we do our own underwriting, so we can develop guidelines as needed, particularly with the non-QM, and flexible underwriting, as well as Carl said. Given with non-QM has so much flexibility that you can possibly get an exception if you talk to the account executives, which again ties back to our ability to be can-do. And then we've got 2 other webinars coming up. We'll have another broker orientation for people who are either new to us or they want a quick refresher. It'll be on May 9th. And then the next one of our expert insights series, we're going to be looking at kind of how artificial intelligence is getting involved in the mortgage business from a bunch of different aspects: underwriting, marketing, content generation, and then some of the kind of pitfalls and perils that it could get you into. So we hope people will be interested in that, since AI and Chat GPT and all the other tools that are out there are kind of hot topics and trends. So we thought we would take a look at that with the team. So that's everything that I had to cover.
I have one last, if I can make one last comment to the brokers that did attend. If you're looking for, you don't want to, if you want to find A&D Mortgage on a pricer that's free, just go to lenderprice.com marketplace. Just type that in your URL, lenderprice.com/marketplace. You can sign up for the pricer's free, and you can find A&D Mortgage on there.
Thank you. And be sure to subscribe to Rob's Christmas blog if you guys haven't already. He's got some of the best information out there every day, and he's a good friend to us, and we're going to be a good friend to him.
Thank you, Carl.
So with that,
Thank
I think
you.
I think with that we can close it down. So again, if you show up late or missed some of the content, we are recording this, and I'll get it out to everyone within the next 24 hours or so. Might even be within the next few, depending how quickly the file processes. With that, I want to thank David, Carla, Rob, Rich. Appreciate it.
Thank you, Carl.
For their time.
Yeah, thank you. It was great.
Thank you.
Thank
It's
you.
great.
And,
Thank you guys very much.
and mostly
Bye.
thanks to our brokers.
Thank
for
you.
watching. And,
Have
All
a
right,
great
guys.
day.
all right. Goodbye, everyone.
Go get him, Carla.
I'm
Bye-bye.
out.
Bye.
So you got to